Welcome to the Inspire to Invest podcast, where we're sharing stories from real estate investors and how investing has changed their lives. This episode of the Inspire to Invest podcast has been brought to you by HoneyTree REIT and PropertyCast.io. Hey everybody, welcome to Inspire to Invest. I have Isaiah Henry joining me today, and he's actually from my neck of the woods here in Pickering. Not too many real estate investors I know that are local to me, so welcome. Isaiah is a Wilfrid Laurier graduate, and he also has a background in law enforcement. But back in 2017, he discovered real estate investing, and he got his start with a Toronto condo. And then he segued and grew his portfolio into Oshawa, Windsor, Sudbury, and Timmins. But since he is managing his portfolio remotely, he actually created his own property managed company, earning him the title of Mayor of T-Town in Timmins. And right now he's looking to collaborate with more joint venture partners, expand into other small multifamily properties in Timmins. And he's also looking to continue growing his flipping business. So I thought that was really cool. But thank you for joining us today. How are you?
I'm great. I'm great. Thank you so much for having me. Appreciate it.
So I thought it was kind of interesting that you started out in law enforcement and then you obviously shifted things over. Can you take us back to what life looked like before real estate investing and what was a catalyst to really get started down this new path?
Yeah, so I finished at Laurier and I was all about law enforcement. I had to put that police across my chest, gun on my hip kind of thing. So I was on Metrolink as a special constable. I got on with Toronto Police, and I thought I made it, and I thought like that was it. So whatever, finish the college and everything go through. And I'm just looking around, and this isn't disrespectful to all police officers, but I was seeing the lives of people 10, 15 years ahead of me, and it just wasn't it, man. I saw some guys, they were like, beaten up. Like they look like they just went to war. I'm like, how old are you? They're like, oh, I'm like 35. I'm like, 35? You look 95. Like, what happened? And then you start talking about like financial positions, family, guys are on their second and third wife, guys are in financial stuff, they're gambling, they're doing this. I'm like, hey, maybe this doesn't align where I want to go. Now, in
Yeah.
full transparency, didn't end with Toronto on good terms for myself or Toronto, but hey, it is what it is. But from there, I was able to see like, okay, I thought it was just go to school, get the job, and then you're set. And then
Yeah.
understanding, hey, that might not be it for where I want to go. I was kind of brought to the idea of real estate investing a little earlier on in life. And I opened this little news advertiser paper, and there it is. That's the first Toronto condo I get
Yeah.
myself into.
Yeah. So then how did it go from a condo into all these other markets and then eventually multifamily? Because I think for a lot of people, like, there's one company that I've taken some education with, and they talk about how multifamily is ideal because, there's less leaks, if that makes sense. If you have like four tenants, it's less of a pain if they leave than if you have just one tenant in a condo, right? But that was your start. So then how did that go from this condo into all these other markets and all these other things?
Yeah, 100%. So the condo for me was just easy. Like I bought that one on payments, no idea what I was doing, very little education. I just knew this is how much I make. This is the deposit structure. I can make it happen.
Yeah.
And then looking at like some random, like I think I can rent it for this. Like really didn't even know how to do rental comps or whatever.
Yeah.
And it was a new build, so I knew like if anything didn't work, I would just be able to sell or assign it, and that's actually what I
Yeah.
did out of that. So I bought that one. I said, hey, this went pretty well. I just saw the equity go up like crazy. Like I bought it under three in less than a year. It was the next phase was trading at five. I was like, holy crap, that's some serious equity right now. I was able to take that, buy another property in Oshawa.
Yeah.
Felt very tapped out for cash, and then I started getting into long distance investing, which is
Yeah.
right up my alley. Right up my alley because very tech savvy, and I don't like traveling. So that kind of worked for my skill sets and what I wanted to get done. So moved out to
Yeah.
Windsor, picked up one, did some work up in Sudbury, Timmins, Sault Ste. Marie, and then now
Yeah.
I would say about 85 to 90% of my portfolio is in Timmins, and then
Yeah.
I'm growing and scaling in there.
Yeah, I find that interesting. There was actually someone that I interviewed that her podcast aired just recently, and she talked about how her and her husband started in some of those smaller markets, like Timmins or someone else in Windsor, and I think they had very strong opinions about why they're glad they're not there anymore. So it's
Interesting.
interesting that you're obviously enjoying that market. So maybe you can talk a little bit more about what attracted you to an area like that and what some of those benefits are.
Yeah, 100%. So first thing, price point, like the first one I got there is like well, like under a buck 50, easy 3 bed, 2 bath, like single family home. Rented that one out for, almost two at the 2% rule. And I was like, wow, this is super easy. So one thing you did say that I wanted to bring up that is almost contradictory in Timmins. Everyone's like, oh, go for multifamily. It's less leaks and everything. Yes, that's okay. When you're in a very strong market with a very strong tenant pool, that makes sense.
Yeah.
In a tertiary market where your tenant pool might not be as strong, you're actually just complicating. You're actually putting way more stress on yourself. Some of the properties that I've helped investors manage up there, 5, 6, 7 units, the management expense is crazy because so many tenants are fighting with each other. These are older towns, right? So the construction isn't as good as the GTA. So you're getting these older buildings. It's actually a lot more issues. I found much more success with the single family duplex. Like
Interesting.
I got single
Yeah.
families up in Timmins. I don't even hear. I got a nice family in there. You pay top market rent. They don't do anything. I guarantee my rent's up there and it's
Yeah.
hands off. It's when I started getting into the 3, 4 units. That's when stuff gets a little bit more management intensive. But again, I insourced all my management to start my own little property management firm. So it's easier for me, but I definitely see where other investors coming in, they don't necessarily get the same economies of scale that they hope for.
Yeah, no, understood. Now, you're obviously talked about some of those challenges that you've seen, but when you look back at now scaling your portfolio, what would you say are some of the obstacles that you faced?
Some of the obstacles definitely capital and like lack of knowledge. And I think those go hand in hand because everyone's like, oh, I don't have the money. And some people are like, oh, I don't have the knowledge. It's just like a synergy between them both. So
Yeah.
one of the things that I did when I was scaling is I got lazy, I'll be honest. I really understood the Burr method, and that's what I did on my first couple of deals. And it's
Yeah.
a lot of work. It's hard to find the deal, do the construction, do the rental, refi out correctly, make sure you have all your income documents there. It
Yeah.
is a lot of work. And maybe I just got lazy. So the next property I did was a turnkey, which isn't bad, but it's only bad if you're trying to scale. So I did the turnkey and I saw myself get stuck. I was like, ooh, doing this actually kind of locked up my money. And I had to do all kind of financial and real estate gymnastics to pull money out to continue to scale. So
Yeah.
that was my biggest hurdle. But once you understand it's about constantly churning over that money to continue to scale, that's the
Yeah.
way you got to go. And once you figure that out, I think things are okay. You just got to be a little bit more patient waiting for the deals.
Yeah. So how long would you say that that took you? So obviously you got started in 2017. It's been about 7 years. So what was the pace that you're working at in terms of, acquiring these different properties and scaling across the different markets?
Yeah, so very slow. So I bought it in 2017. I didn't do anything for like 3 years. And then 2020, I did one in Oshawa. Then the next year I did one in Windsor.
Yeah.
I think the same year I did maybe one in Windsor, one in Timmins.
Yeah.
The only things I did in Sudbury was wholesale. I think I wholesaled four in Sudbury. That's when the market was hot. Like everybody and their mom was going to be
Yeah.
a Sudbury investor. So that was really nice to capitalize there.
Yeah.
And then I think just from then on, about maybe one a year up in Timmins and just slowly adding to the portfolio up there.
Now, can you talk a little bit more about wholesaling? Because I have had some people reach out to me in the last little while to talk about it. And I think it is something that a lot of people are intrigued by, but nobody really understands how to do it, like how you find the properties, how you flip the papers. So maybe you can talk about your experiences doing that.
Yeah, it's been great. So a funny story. So I actually wholesaled the property. Like I bought it for $1. I like not like it wasn't given to me. Like still purchase and sale agreement, but even for $1, my lawyer even looked at it and she's like, "Are you sure this is right? Like you wrote the wrong price." I'm like, "No, no, no. I bought it for $1." So the thing with wholesaling is like you're not necessarily going after properties, and again, you can do that. That's fine, but you got to go after problems. You find problems, you find profits, and that's how the good wholesale deals are done. If you're chasing properties, no disrespect, I would say go the realtor route because
Yeah.
they have a property they want the highest price on the market, and that's I think more a realtor issue. But if you want to solve problems, then I think wholesaling is great. So whether you're doing off-market deals, whatever your marketing strategy is to find those problems, not properties, that's going to be your best avenue to actually be an effective wholesaler. And there's guys
Yeah.
doing it at way bigger scale than I am, but I find my little niches, my little lists, and I'm able to market to them effectively.
Yeah, yeah. I met a wholesaler actually that's really big in Southwest Florida. And, down there, you actually don't have to have home insurance. Which is so weird, obviously, because there's a lot of hurricanes and things like that, but you don't actually have to have it. So when storms come through and, someone might have had their home partially destroyed, but they're not insured, so they actually can't afford to do anything. So they'll send out mail outs to all of these areas, especially when there's storm surges and things that are happening and stuff like that. And he looked at it like, we're solving that problem for them because we might give them 70% of market value, but they actually can't afford to fix it. So they're kind of stuck. They can't sell it as is. And, he's making multi seven figures doing that. Like when I met him, he's like, well, I made like mid seven figures. So I just took the rest of the year off. And like July,
Yeah.
so it was just a way that they kind of send out those mailers. He's got about 20 people that call the people that go into their click funnels and stuff like that and just kind of stay on top of them. And, if they're in that situation where they are distressed, it leads to these opportunities. And then he flips the paper to hedge funds. So that's kind of the system that he has set up. But for the problems that you've been looking for here, like, how are you finding those, right? Like, I understand what you're saying, but like, how are you actually finding them?
Yeah, so you can, so this, I'm not gonna lie, wholesaling in the States is way easier. In Canada, like you can pull your, like in the States, like you can like just get lists, like so much information is public. So what I've done is I've just looked at all the public information that the States go after and then just work my tail off to find how I can access that information or close to that information in Canada. So I found direct mail has been pretty
Yeah.
good, but honestly, for me, and again, I would say I'm on a small to medium scale, my wholesaling is just being that guy in your market. Like the property that I bought for $1, I was literally just sitting in the office. The guy called me out of nowhere, unknown number, called me, said, "Hey, Isaiah, you're the Timmins guy, right?" I'm like, "Yeah." He's like, "Yo, you got to buy this house." And I said, "First of all, I don't got to do anything." And it literally was like that. And a lot of my best deals have come from zero work, just continuing to be out there and in the market. Again, don't get me wrong, like I'm still trying to market it and get my stuff out there. But if you
Yeah.
can, this is my personal advice or experience, be that guy in your market, and
Yeah.
eventually stuff will just start hitting.
Yeah. Yeah. No, that makes perfect sense. Now, when you look back at everything, what would you say is something you're most proud of?
I would say actually it's outside of the real estate business. It's actually my co-op and scholarship program. So I have a co-op program with the local high school that kind of segues into the scholarship program. I work
Okay.
with 1 to 2 high school kids a semester, and we kind of just dive into the real estate business. We do a little bit of social, a little bit of
Nice.
deal underwriting, a little bit on the mindset, the financial analysis of it, and they just have specific tasks, and they do it in like a hybrid model. So they do a lot
Yeah.
of it online because that's where I feel work is going anyway. So to teach kids to come in and do this for me, I'm like, that's not it. Like I need to teach
Yeah.
you how to work hybrid on your phone, on your computer, and be effective. And one of my first students, I won't say her name just to protect her, amazing. Like this girl will be the CEO of some company one day. And she gave me a 10K wholesale rip, 100% her. She did the marketing, she did the follow up, got the lead, pushed it over to me. All I had to do was sit there and close. So yeah, it was really nice to see how productive you can get these high school kids to be. And then obviously you segue to a scholarship to make sure you're giving back to the community as well.
Nice. Yeah, that's awesome. I like that. So on that note, we're just going to take a really brief break for word from our sponsors, and we'll be right back. Transparency, integrity, and trust. If you choose to work with me, you can be assured that business will be conducted honestly and openly. Time is of the essence in this industry, so you can expect nothing short of quick, clear communication from me. I'll keep you informed every step of the way so you feel comfortable throughout this entire process. Our homes are where we eat, sleep, relax, and play. My clients' best interests are at the heart of everything I do. And with this said, my service to you doesn't end when the transaction does. As your realtor, I'll not only help you buy and sell your property, I'll also educate and support you along the way. I want to help you fulfill your goal of home ownership and become your trusted real estate resource for life. I can't wait to share my passion for real estate with you. More importantly, find you the perfect house to turn into your home. Looking to buy, sell, or invest in Durham Region or Toronto? Let's chat. Is the real estate investment you're considering a gold mine or a landmine? Introducing PropertyCast.io, the black magic of real estate investment analysis. Use PropertyCast.io to analyze and underwrite real estate investment opportunities, unlock the potential of a property, and share professional reports. Jordan McGregor is a commercial realtor and founder of PropertyCast.io. He identified the need to simplify and streamline how properties are underwritten to help investors make better decisions and sound investments. PropertyCast.io is a best-in-class purpose-built tool for real estate investment analysis. To find out more, go to PropertyCast.io, and to sign up, click the link in the show notes. Inspired to Invest is proud to support the Beyond Success program. In today's complex world, it's absolutely crucial for our youth to learn how to take charge of their financial future. We believe that every young person deserves access to accurate, practical financial information. Designed to bridge the gap, the Beyond Success program leverages a comprehensive educational bootcamp to equip young minds with essential financial literacy skills. At Beyond Success, it's not just about teaching financial literacy, it's also about fostering a foundation for a prosperous and empowered future. Join us. Together we can build a brighter financial future for the next generations. Join us. Together we can build a brighter financial future for the next generations. Hey everybody, welcome back to Inspire to Invest. I've got Isaiah Henry here with us today, and he's talking about how he transitioned from law enforcement over to real estate investing. And he's done a little bit of everything, some pre-construction condos, he's done multifamily, single family, and also flipping and wholesaling. So with all of that being said, what would you say is one of the craziest things that you've experienced as a real estate investor so far?
Yeah, so definitely the $1 property. So I'll kind of walk you through that one. Like that's for me the craziest experience. So
Yeah.
like I said, I was sitting in the office, just getting some admin stuff done. I get a call
Yeah.
from a random number. And he just says, "Hey Isaiah, you're the Timmins guy. I need you to sell this property." We kind of walked through it, and he wanted a little bit more than I could offer. But again, like just being that guy, someone that they like, know, and trust. So I was already there.
Yeah.
And I was able to close. He knew I had the ability to close, so whatever. I just keep going back and forth. I take a look. I send the team out to look at the property. It's
Yeah.
crazy, like foundation, mold, like all this stuff. I'm like, listen, bro, like this is not really something I want to take on. And then I find out, one, he was a police officer as well, so we could bro down about that. And two, his wife was really sick, and he was just having trouble making the trip. At the end of the day, he called me back maybe 10 days, and he just said, "Yo, if you can buy this for $1, cover the legals, it's yours. I can't go back up there again." I said, "No problem." Team
Yeah.
got to work really quick, locked it up, all the paperwork, and got that done. So it was just crazy,
Yeah.
being in the right spot at the right time.
So then what happened next? So you acquire this property and it sounds like it's pretty distressed. So who did you sell it to? Like, did you fix it up and then sell it, or like what was the process afterwards?
Yeah, I didn't even touch it. So I just, again, being the guy, the players in the area, 16 hours, I had that thing sold.
Yeah, awesome. Cool.
Yeah.
So in terms of lessons, so since you have done so many different things, what would you say are some of the most important lessons that you've learned?
Yeah, real estate is so simple. Like, at least me, I make it so complicated, at least on the investing side. Find an asset, add some value, and cash out. Like it's that simple. Anytime I see people trying to make it more difficult than that, that's when you get stuck. Don't get me wrong, turnkey is fine, but at that point, it's very hard to get your capital out to continue to scale. There will be a point where turnkey makes sense, but if you're looking to grow, the easiest way is find an asset, add some value, and then cash out, whether that's
Yeah.
in renovations, whether it's solving a tenant problem, whether it's adding an extra unit. There's so many ways you can actually add value to a real estate asset. And once you figure out your niche or what you like doing, add the value, cash out, and move on to the next one.
Yeah, I mean, I think that is something that's been a tried and true way to go about it. I think one thing that people have just had to be very careful with now, though, is because the housing market has been down and interest rates have been up. Like, in some instances, they put money into properties and then you're not getting that value out. And in some instances, they're even taking a loss, or the bank appraisal is not coming in where they need it to be. So I think I understand exactly what you're talking about, but I think you still have to be very careful with your market and just like what's happening and stuff like that, right? Like there's some investors I'm connected to right now, and that's their business. Like they flip, but they lost money on the last several houses that they did. So now they're kind of experiencing quite a big loss. But you just have to be mindful of everything that's happening around you at the same time.
Yeah, 100%. And I talked to some guys who are doing flipping like at a larger scale as well. And a lot of them, if you're going to do it at that scale, like, you're going to get some losses, but they're going to win with volume. And then if
Yeah,
you're going to do stuff at a smaller scale, your contingencies just have to be higher. Like when I started and when now, I'm still broke. I think like that's the investor journey until you get to the exit phase. You're just broke the whole time. Like, where am I getting the cash to do the things I want to do?
yeah,
And I think if you can either mitigate whether you have like, plan A, B, and C, or you're doing less deals just to mitigate your cash position, I think
yeah,
that's very important now. It was important before, but getting money at 1% was fun for everybody. But now with money a little bit more expensive, it's more important to be very diligent in the way you underwrite and have your
yeah.
contingencies A, B, and C, or just win on volume, whatever your plan is, just to be a little bit more dialed in.
Yeah, no, absolutely. Now you touched on briefly just some things around education. So can you talk about how you've gone about educating yourself as you've been growing and what's some of the best advice you've received so far?
Yeah, so when I got in, I was like, yo, heck no to the mentorship. Like, I'm not doing any of that. I can do this all myself. You learn very quickly. That is not the way to go. I've spent, and people always talk about how much they spend on mentorship, and I don't think it's necessarily a money thing you have to do. Like, even accountability group. Like, I'm in an accountability group right now, and it is so helpful for the growth. Just being accountable, bringing stuff to the table every week when you meet. But I've done various paid, free involved mentorships. And I think getting around a community of people doing the things that you want to do has really helped. But in terms of advice, I would just say like you can win on singles and be happy when the home runs come. Like I think if you only swing for home runs, sometimes you strike out and then like it's really hard to recover. Warren Buffett always says, first rule of investing, don't lose money. Second rule of investing, see rule number one. I'm like, boy,
Yeah,
if you don't lose money, you continually hit singles as you continue your investing journey, you will eventually get where you want to go. And again, I'm very risk averse. I wish I was more risk tolerant, but for me personally, I am risk averse. So
yeah,
doing the small little singles, deal here, good management, good tenants, and continue to move up that way, way
yeah.
more manageable to kind of get where I want to go.
Yeah, yeah, that makes perfect sense. Now, you obviously talked about how flipping is something that you want to kind of continue down. Like, what would you say is next for you? Is that something that you want to focus on, or, how do you see things unfolding in the next few years?
Yeah, I'll be honest. If I didn't have to be a flipper, I wouldn't. The risk appetite is heavy. Like anytime I go to the go on a flip, my stomach is just in knots for months.
Yeah,
Which is it's a necessary evil in my opinion. Like you do need an active business, and that's what I think so many people missed on that 2020 2022 bull run. Everyone's just buy 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 buy, but now you see these guys or girls with big portfolios and the maintenance, the capex, the tenant issues, Trudeau's doing whatever he's doing up there, and money needs to be outlaid. But if you
yeah,
don't have that active business, where do you get these cash from? So you're either going to take out more loans, or you're going to go have to start raising private debt, and that gets sticky as well. So the
yeah,
reason for me personally flipping, it's a nice way to make larger sums of cash, and I'm
yeah.
not involved. Like I don't swing the hammer or anything, so I'm not actually involved. So I can still keep my 9 to 5. I continue to flip to build that up, and then I put that back into real estate, whether that's paying down debt or acquiring some additional properties.
Yeah, no, that makes sense. Now, you talked about when you were in law enforcement and the life that you didn't want to be leading. So maybe you can talk about how real estate investing has changed your life. And when you think about financial freedom, you know, you're not there yet, but what would be your financial freedom goal?
Yeah, for sure. So in terms of real estate, what it's afforded, like it's just giving you so many options. Like it gives you a really great platform to lean on. Like, if you ever switch jobs, lose jobs, do whatever, and you don't have the real estate or that additional business in the background, like you're scared, especially now the job market is not what it once was. Like I
Yeah,
know guys, I talk to people who are looking for jobs. It's just not out there. And I think social media does a terrible job painting this picture. Everybody's making 150, 200K. That's not a thing. That's
yeah,
not what everyone's making. But if you don't have real estate, you're really like drowning back there, and as your expenses go up. But real estate has really given me a platform to continue to build. Like whenever I was between jobs, I always knew I had something, and it continues to churn in the background, month over month, year over year. Tenants pay rent, mortgage goes down, and the property values go up.
yeah,
Hopefully. and you're able to continue building wealth over time. So that's been great. Now, in terms of where I want to be financial freedom wise, the goal for my portfolio is 20K gross rents. Once I get there in the portfolio, which I thought I was going to be there on the last acquisition, but it didn't work out, but that's okay. 20K gross rents, stop acquiring, flipping and active income, paid on all the debt, however long that takes you. Let's allocate a 50% expense ratio. That's 10K a month, free and clear on your property, including management, capex, expense, everything, right? So
Yeah.
that's 10K every month, nice and easy. And then you can do
Yeah.
what you want. So whatever, I want to do, like I'm big into fitness and working out. So I'd probably start a gym. There's other active businesses that I'd love to get into, but man, if you can solidify 10K a month, oh baby, you have so many options to kind of get out there and do what you want to do.
Yeah, that sounds great. Now, obviously, the name of this podcast is Inspired to Invest. So I always like to ask our guests what kind of quotes motivate and inspire them.
Yeah. So this one again, like a big church boy growing up. So it's work like it's up to you and pray like it's up to God. So you're going out there every day, like working your tail off, but understand that there's a higher power, kind of running things there. So again, work like it's up to you, pray like it's up to God.
No, I like that. Is there anything in particular that you want to leave with anyone that could be tuning in right now?
Yeah, I would really think don't look so much about what other people are doing. And man, I got to tell myself that advice all the time. Like I feel everyone is looking, at everyone else's paper and seeing what they're doing, saying, "Man, I'm so far off. I'm so far behind." Just
Yeah.
run your race. Like at the end of the day, like you the Instagram and social media, that's the highlight reel for myself included. There's so much stuff going on behind the scenes that other people don't know about. If you're living the life you want to live, meeting the goals that you want to have, that's a win. Like it doesn't
Yeah.
mean you have to be like Isaiah, like Serena, or like whoever. Like live
Yeah.
your own life, run your own race, and you'll get where you want to go.
Yeah, no, that makes perfect sense. Now, for anyone that does want to get in touch, I know you talked about joint venturing, so maybe there's someone out there that has some money they'd like to place, but what's the best way for them to get in touch with you?
Yeah, all over social media, Instagram is the best. It's Mr. Henry, ITS Mr. Henry. That's where you can find me.
Great. So we'll include that in the show notes below. Of course, thank you for your time for being here for today. For anyone that is watching, thank you for following along. Make sure that if you've enjoyed this episode, you have subscribed below and you're following along at Inspired to Invest podcast. And of course, remember, when you invest in yourself, the sky's the limit. Thanks again. Thank you to HoneyTree REIT and PropertyCast.io for bringing you this episode of Inspired to Invest. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.